Hello traders, this is Rich Derrick from Tradesight. This is the market preview for the coming session that is going to be Tuesday, April 9th, 2013. We had a fairly robust session where we ultimately climbed up to fill the gap that was left open from the Friday non-farm payroll number. The session was kind of predictable in that our scans were definitely leading towards the buy side on Friday the way that we left off. There were a lot of camouflage buy signals, a lot of CPS signals, and they were outlined in the scan review. So definitely make sure you take a look at those from time to time because they are very, very useful in getting some insight in what to expect in the next session. So let's take a look at what we had as far as the overall price action in the market today, and also the health of the market internally. Had pretty decent gains in the S&P, up 13 handles in the NQ, tacked on kind of a laborious 18. The NQ is still underperforming the ES futures on a pretty protracted basis here. We'll look at that again later. Internally, the market finally did come on a little bit. We had some decent advanced declines on New York, plus 1100, but NASDAQ continues to really stay the second runner by a big distance here. We only had plus 400 issues on the NASDAQ side. Let's take a look at the major charts now. Let's take a look at the ES futures first. Here's a look at the ES futures. Came back on pretty strong here. We're back up into the area of this 6/8 level, 1562.50, which is definitely important on the charts. That's definitely the nearby level that's really been in play. We closed right at that level pretty much, which was our high close of the move before this little mini break started. But we never really gained any momentum to the downside here. MACD is still kind of rolling over here, but doesn't have a lot of downside slope to it, and it doesn't look like that zero line down here is going to be in play, today or tomorrow. Definitely going to need to develop some real momentum to do that. So for now, we're still trading pretty much in this lateral range until we can get a close and a follow through above this 1562.50 area. The NQ futures continue to kind of just drag on the market. You can see that the whole design of the chart here is just much weaker. The real key area here is this 8/8 level at 28.1250, which has been key resistance, and they haven't really been able to bust through it. Keep in mind here that while the ES is back above the 10 EMA, the NQ futures are still below it. And we did actually have one close below the 50, but no follow through, which would have really changed the trend here to much more negative. The MACD is weaker. The zero line on the MACD is definitely much more in play than the broad market side. So if we do start to roll over, you'll probably see evidence of that in the NQ futures first. Now looking at the multi-sector daily chart, you can see that gold is still kind of the whipping boy and still a source of funds. We had pretty good performance today from both the BKX and the SOX on a relative basis, but the BTK index, the biotechs, were really still kind of weak, and they're much more overbought than the other sectors, so that really should come as no surprise. I'm still watching the BTK issues on a regular basis for some potential rollovers. Here's the NDX versus the SOX in the daily time frame, and we actually recorded a new low in relative strength on this move. So it really makes it tough for the broad market to get up and go without any support from the NDX. So if we do record new highs, we really need to see the NDX come on stronger, and if it does not, then the long side at that point is really just kind of rental only, if you will, meaning it really just short-term trades breaking out because they're probably not going to follow through. Here's the SOX versus the NDX. The SOX was relatively strong today. Let me flip this to the daily time frame. Give you a little better look at this. Was relatively strong. So what we need to do is really get back up to this key level here, this breakdown area, which is still key resistance here on the chart. If we do get into that area, then we can really start talking about seeing some relative strength start to develop in the NDX. But it's going to be very difficult for the NDX to pick up any relative strength with the SOX acting so poorly. Here's a look at the SPX versus the TLT. We broke support of the trend line here, which is definitely a cause for concern. In this risk on risk off metric, this really kind of changes the tone of the market. I think what's going to happen is if we do get back up into this trend area here, it's probably going to be resistance again. We're probably going to have some real weight pulling down on the market, and we're probably going to see the market really held back by this unless this really starts to sprint and this becomes like a springboard. We're going to need to see a few days of really good performance here to change this trend. But that could happen. But for now, this is still more of a negative than a positive for the overall market. All right, here's our cumulative advanced declines. The New York side is still okay, though it's really sloppy. It's really starting to round off here and start to level off, which is going to be something that we need to monitor closely, because this really is the one thing you don't want to argue with as far as the market internals go. Since NASDAQ has been relatively weak, the trend line here has been essentially breached, but really not broken. We're really just seeing the beginnings of a break. This technically could be an A wave down and a B wave bounce. If we start a C wave to the downside here in Elliott wave speak, that's probably going to be the death knell for the market. At some point, we will see then the cumulative advanced decline for the broad market side here at the New York Stock Exchange start to roll over. But we'll have to see how this really plays out. But if the NDX starts to roll over and the NASDAQ side takes out this prior low, that's going to be a huge negative development and probably will be one of the first signs that we're really starting to roll over for real. Now, as far as the overall sectors go, the OSX was the top performer. One of the index members, Lufkin, was taken over for a huge premium, so that really colored the index here. So while it was up 4% on the day, it was really on the performance of just one particular index member. The housing sector was fairly strong. Airlines bounced back after really getting drubbed last week. The utilities were kind of mid-range here. The XAU was the last laggard. BKX was the one that's kind of really concerning here, because that really had no positive performance and was essentially flat on the day. Pharmaceutical index was fairly weak and underperformed the market, which shouldn't be too much of a surprise, because that's more of a defensive play. But it's just kind of slightly a risk on tape here from the sectors. But let's take a look at some of the charts now. Here's a look at the OSX, big gap up. It is back above all the major moving averages. We are still below this 8-ace level at 250, but keep in mind that if we do get a close above the 8 candle here, we're going to get a seeker exhaustion, which is on deck. It'll be a very lateral one, and one that we take a little less seriously than something that's got some good extension to it. But these deferred signals are usually notable when they do happen. Stocks had some pretty good performance. We were a little bit oversold here on the MACD below the zero line. The interesting area is going to be this 624, 628 area, which is going to be the 50 and the 10 EMA. So we're not back above that. So right now, even though we did bounce, this remains short-term negative. Here's the oil futures. The oil futures are now pretty much boxed up in this little range that they've been in for a few days. Keep in mind here, the key feature is that we're below the 10 EMA and the 50 DMA, so this is still short-term negative. You see how important this resistance was up here from the static trend line off of this 9-bar drop. That's the green line up here. We got up there, touched it, and immediately started to roll over. The 200 DMA at about 91.5 is going to be really key support, and if we do drop down there, it'll probably be gamed. Even if we ultimately do break lower, it'll probably be gamed the first couple days that it does trade. All right, folks, that's going to be it for this evening. As always, thanks for listening, and this has been Rich Derrick for Tradesight.